Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session with you all. The final live session of the year, and hopefully, your next year would be very good and happy investing to all of you. And hopefully, you'll be able to make a good amount of money even next year, just like you would have over the last 18 months. So, with that wishes, let's get things started here. So, in today's session, I'll discuss about what I feel could happen over the next 8 9 months, a major part of 2022, and how we as investors, short term traders, are going to make money in this market. So, I'm going to discuss that, plus, we'll answer your queries as well. So, let more people join in. I know it is a Thursday morning. It is extremely cold here in the north, so hopefully those who are at the north in the north would be taking care of themselves. Hi there, hi Saeed. Assalamu alaikum, Saeed, and PVD. Morning, good morning, and hopefully you're doing well. Uh, the weather has been extremely chilly, and the markets itself have been very cold. So what has happened is that the volumes have dried up completely. Understandable, with the kind of market, you can say, up move that we have seen this year. That people have made money and they are now sitting relaxed around the new year. So that's the thing. Okay. Uh, morning, MS. Hi, Parek. Uh, so, good morning. So, probably I'll be doing live sessions in the mornings. That is more comfortable for me with the family around. So, more comfortable for me to do the sessions around 10 or 10:30 a.m. rather than in the evening. So, may just continue to do that, but the timings may continue to shift. So, kindly do look at the comment box and what do I put up in there. All right. So just to begin the session in earnest, as we've seen that currently the market is around 17,200. So just a word about the market, and then I'll just discuss as to how next year could pan out. So the market is around 17,200. Uh, I see that the market may just end here over the next couple of days. I mean, this year the market may end up around here. And next week, that is in the first week of January, we could be just here and hereabouts for the next 2 3 days. So around 5th or 6th of Jan, we could be around 17,400 or so. But I fear that the FIIs may come back and sell again from 6th or 7th of Jan. I would like to know your thoughts on it as well. They've already sold 1.5 lakh crore over the last 9 months since April, and I think that could just continue till the budget. So in that regard, if somebody is trading short term into the market, then they would need to what they need to do is probably take money off. If you get some sort of a rally over the next 1 week, say you get to 17,500, 600, and you're making any sort of money, take money off. I might be doing the same. If I get a 4 5% rally in the market, I might just take my money off from the trading position and see again as to what happens if the FIIs do not come back. So that is the crucial part. Uh, and then later on, post budget, we could see a decent rally in the market. So continuing from that, what I feel over the next 1 year that would happen is that the returns will not be the same, and that has been the consensus, and I believe the same, that the way the markets have risen from 7,500 to 18,600, um, I see a moderate year, maybe a 10% up move, 10 to 15% up move on the Nifty by Diwali next year. But what will happen there is, say 10% from 18,600 is around 21,000 or so, 20 and a half thousand or to 21,000, 10 to 15%. But what will happen is over the next 8 9 months, I feel a very sluggish market would come in. And not to just tell you about the markets, but your stocks or your portfolio, the mid caps and small caps, may just gyrate between one range and then again get into another range and just gyrate in that range. So if you want to really make money, and that's why I changed my stance, and many of the people on Patreon and YouTube might be understandable of that, that I changed my stance from a 5 6 year investor to a few months trader. And I did that because of this reason, that I feel at least for the next couple of years the markets could remain sluggish. They will be in the up move, but you will not have an streamlined 2 year movement into your stocks. So what will happen is, most of the sectors will, so there'll be sector rotations basically. So if you look at autos, for example, they are having that semiconductor issue. It is continuing at the moment, but it seems like by March of next year it will just go away, most probably by March April. So all your auto ancillaries will start moving. IT related stocks which are related to auto companies would start moving. And when you so if you are not into that, then what will happen is that you'll not be able to make money, because most of the traders, investors would be invested or trying to make money there and put in money into that sector. At the moment we are seeing pharma doing well because of this third wave thing and everything, but I think pharma would again come back to normal levels, say in a few months or few weeks, say 4 to 6 weeks, when things normalize. Similarly, you see opening up trades now not doing well. You have the PVRs of the world, Jubilant Foodworks, etc., getting hammered, especially your hotel stocks and all. And probably 2 3 months down the line, when people will understand, as far as I think, is that the variant is getting weaker, and there is less hospitalization, virtually no deaths, and which is very good. So what will happen is that all your hotel stocks and everything would start doing well in patches from Feb March onwards, and so on so forth. And again things will get awry in the May June period if the markets rise again, and there will be a 10 to 15% correction. What I feel is that we have not seen a continuous or a prolonged 20 22% correction in the market overall. That might be coming in 2022, and that might come in the second half of 2022 after June July. And so what that entails is that whatever market up move will take place over this period of the next 6 months, that 20% downtick will take the market back to say 15,000, 16,000 levels. So not predicting the market per se, but what I want to say here is that the stocks itself will not be, or all companies or all stocks in all the sectors will not perform the way they have been over the last 18 months. And what will happen is that select stocks based on their fundamentals and only stock specific moves will take place. So what you people need to do is that take positions, small positions over the next 8 9 months into stocks, and then probably look to make 15 20% over a period of time. And when the stocks have moved up 20 25 15%, take positions off and then build positions in some other sector which you feel, or which seems like going up or doing well, rather than sticking to your portfolio and thinking that over the next 1 year money will be made. So that is probably what we are going to see. It's going to be a treacherous market. It's going to be a sluggish market for 2022 and even 2023. That's what it seems like overall. All right, so I'm ready to answer your queries over the next 10 12 minutes. So you can shoot your queries to me. Kindly use the super chat super sticker feature. That will help me grow the channel, help you also ask me questions and eke out answers in greater detail. So you can put in your queries now. uh, all right. So I have a query that coming in on RBL Bank. See, what I can say is, then this is the prime reason why I was not in favor of getting into any sort of banks. This is another reason. So what has happened with RBL Bank? I don't know what has happened. There's not a huge clarity. Whatever the management has come out with, we have to go by those words. And If that is the only thing, then the stock may not fall. But what I presume is that there could be another round of selling that could await us when the FII come back in Jan Feb, and it could happen in all banking stocks again, and in most of the financials. And RBL Bank, once it gets to 170, 180, 175, 165, may see another round of selling. I would not suggest you getting into something like RBL Bank from a long term perspective. Yes, you can trade, probably buy here, sell at 160, 170, but it could be very difficult to do so. So it's better to probably avoid the stock altogether. All right. GR Infra at 2200. Well, it's a very decent company. What you can do is probably hold on to the stock for the next 6 8 months, and when you're making 20 25% on the stock, then take money off. I think InfoEdge is a very good buy at these levels. I believe that InfoEdge could end up doing pretty well over the next 6 8 months, around 5400, 5500. Very good levels to get into. Whirlpool, I'll wait for the shareholding pattern. I will wait for this quarter results and then take a call. There's no hurry on Whirlpool as to what needs to be done, the way it has fallen. But InfoEdge looks attractive. See, I've not looked at Poonawalla Finance. I won't be able to comment. In fact, I avoid most of the financials, so don't look at them. Look at them very closely. Okay. See, Bharat, thanks for your contribution. TTK Prestige, let me open up the charts and I'll let you know. Okay, thanks. Thanks there, Santosh, for your contribution. Can Root Mobile touch its previous high? I think it can. I think it can over the next 6 months. I think the performance would come in 2500 is very much possible. I'm trying to open up TTK Prestige here and will answer your uh, queries as well. So, see, overall, fundamentally speaking, TTK Prestige is a very, very good 4 5 6 year play. But the performance of the company has not been that great, fundamentally speaking, compared to other consumer companies. And that is where I tend to avoid the stock altogether. I have been following it since 2012. So the performance have not been extremely good. It has been decent. So the stock is around 980 or so. Uh, what you can do is you can buy here with a stop loss of around 900 or so. I think keep a stop loss around 900. So your stop loss is around 900, and you can definitely buy the stock here, have a 10% stop loss, and you could see 1200, even 1350 going forward. Long term perspective, it looks good, but the numbers have to become even better for the performance to pick up. See, CDSL, I still feel 1700, 1750 is possible. A disclaimer, I'm having the stock. So, probably if you can hold, it's much better. And if it dips to 1400, 1380, you buy more. 1370, 1380 is a very strong support on a CDSL. Okay. See, Whirlpool is a very good company, but I need to look at how the shareholding pattern has panned out. I need to look at how the December quarter has panned out. If they are losing a lot of market share, then it is a difficult, you can say, run altogether to go towards 2700, 3000. I think CleanSigns at current levels is good, but you need to have a 1 year time frame. There are, I mean, I have no idea as to how what is the issue, but the stock has fallen a lot. So probably you can buy some here, and on any 10% decline, buy more, buy 50 60% here. The company is good, and I see 32 3300 coming in the next 1 year, 1.5 year. Okay. Sona Comstar is a very decent company. It is just that the valuations are stretched, so I won't be buying here. But a 15 20% decline, good level to buy. If you have more than 3 year time frame, yes, you can buy at these levels also. See, happiest mind, you can accumulate around 1200, 1250, 1150 to 1250. Those are decent levels to accumulate the stock. But be patient because the valuations again is extremely stretched on happiest minds. So it may just remain here for the next 6 8 months. So that's the call on that. A very good stock SBI Life for long term, even HDFC Life. I think life insurance companies are facing the brunt of the pressure of having a lot of claims given to them because of the pandemic situation. Once this subsides, I think this sector altogether, or this section of the sector, will do extremely well from FY24 onwards. So next 6 8 months could be difficult, but if you can buy for 5 6 years, this will do extremely well. Valuations are good at these levels to buy at. Uh, Sectors for 2022, I believe autos may do well. I think autos may come back into fashion. Real estate is another that is looking good. But the problem with real estate is that if the rate hikes take place, then the stocks may not perform that well. But real estate altogether on the ground will do well. In terms of stocks, I believe consumers and autos may do much better. Okay. Hi, Bharat. Thanks for your contribution. Holding IndiaMart at 6,500, hold or exit. I feel that if you get some sort of an up move, then take an exit, book some profits. Uh, because the rally, most of the rally or most of the run up in the stock has already taken place from 2019 onwards. I mean, from 2,300 to be at 10,000, 11,000, and then have declined. I think 9,000 odd, something like that. I think take an exit and look at the conventional consumer real estate companies, uh, news-based companies, companies which have a particular reason for them. So individual companies that could do well, look at them. It's going to be extremely difficult. I can't say that a sector per se will do well. So let's buy everything. Another point I want to make here about the IT industry. So IT will do well for the next 8 years. I'm dead sure about it. But the stocks have run up a lot. The mid cap, small cap stocks have run up a lot. The large cap stocks do not perform that well if the markets do not sustain their levels. So what you need to do is, if you have not got into IT companies, wait for a particular decline in the market between 5 to 8% and then buy into IT firms. It is not that the market may not perform and the IT will keep on performing. It will not happen like that. Yes, stock specific moves may happen, but again, in the IT sector, the move has already taken place big time over the last 2 years. So take that in on mind. Absolutely not. I think avoid JP Power, avoid the power companies altogether. One stock in the power sector that probably is looks good is Tata Power. That's just about it. So do not get lured by lower prices on most of the power companies. Gujarat Gas is good. It's good for from a 2 years perspective. I think 40 to 50% upside is possible from these levels. Buy some here and buy more on declines. uh, I don't have a you can say view on an IDFC first or such kind of banks. See, Map My India is a very decent company. I think for the next 1 year, it might touch a market cap of 12,000 crores, or 20% upside is possible. It has run up a lot even after listing, but it is a very good 8 10 year play, Map My India. So any major declines in the market, good levels to probably get into it. AC company for the next 10 years, I would say Blue Star. I think Blue Star looks good. Voltas and Blue Star both. You can split the money in these two, and probably you will do well in these two companies. Rate gain, see, the IPO hasn't done well. And I have not looked at the basic numbers and fundamentals, so won't be able to comment on it. Okay. Latent view 20% in 2 days. Your view, take money off if you're making. See, another thing I want to say here is that whatever stocks that are moving up a lot over the last 1 week and may go up for 1 or 2 days in January, be very careful in them, that it could be possible that because of low volumes, those stocks might be doing well, and they may get sold off once volumes return. So be careful. If you're making money, good money, take money off for the time being. Avoid 3i infotech. So that's my call. All right, guys. Thank you. Thanks a lot for being online. We'll be online in the live session on Sunday, also Sunday morning. Take care of your health, and do subscribe to my channel. Hit the bell icon so you can get my video straight away when I post it. Thanks a lot.